Hello everyone. In this video, today I am going to explain you about the types of accounts and also ledger posting. First of all, we will discuss about the types of accounts. What is the exact meaning of account? Account is a classified summary of business transactions relating to a person, property, or income, or any expense. So accounts may be classified into mainly two types: personal accounts and impersonal accounts. The impersonal accounts can be again divided into two types: real and nominal accounts. First one, personal accounts. The accounts relating to various persons are called personal accounts. The accounts relating to various persons are called personal accounts. The personal accounts may be further classified into three types: natural personal accounts, artificial personal accounts, and representative personal accounts. So the personal accounts are the accounts relating to various persons. Here, the personal accounts are classified into three types: natural personal accounts, artificial personal accounts, and representative personal accounts. First one, natural personal accounts. The accounts relating to natural human being are called as natural personal accounts. For example, Ramesh account, Suresh account, Rajini account, etc. These accounts represent the names of natural human being, whether male or female, major or minor. The second one is artificial personal accounts. These are the accounts relating to firms, companies, organizations, etc. The accounts relating to firms, companies, and organizations, etc. are called as artificial personal accounts. For example, Canara Bank account, Tata Company account, etc. Next, the third one, representative personal accounts. The representative personal accounts are outstanding expenses account, prepaid expenses account, accrued income account, and income received in advance account. So totally, the personal accounts may be classified into three categories: natural personal accounts, artificial personal accounts, and representative personal accounts. The second one is impersonal accounts. All accounts other than the personal accounts may be treated as impersonal accounts. The impersonal accounts are again classified into two categories: real accounts and nominal accounts. So all accounts other than the personal accounts are called impersonal accounts. Again, the impersonal accounts are classified into two types: real and nominal. Real account. The accounts relating to various assets or properties are called real accounts. So the accounts which represent the names of properties or assets are treated as real accounts. The real accounts may be again classified into two categories. They are tangible and intangible. The assets may be tangible or intangible. Tangible asset means the asset which can be seen. Which can be seen is called as a tangible asset. Intangible asset in the sense the assets which are not visible in nature. The assets which are not visible in nature are called intangible assets. The example for tangible assets are land and buildings, plant and machinery, vehicles, etc. And the example for intangible assets are goodwill, patents, trademarks, copyrights, etc. The next one is nominal accounts. Nominal accounts are relating to the expenses, incomes, losses, and gains. So based on types of accounts, there are certain golden rules for recording the transactions. While recording the transactions in journal, we must follow the golden rules of various accounts. First of all, the golden rule for personal account. Debit the receiver and credit the giver, which means the debit receiver, you have to debit the receiver's account and credit the giver's account. The benefit receiver's account should be debited and the benefit giver's account should be credited. Second one, real account. The rule for real account is debit what comes in and credit what goes out. The rule for real account is debit what comes in and credit what goes out. For example, if any asset is purchased, it comes into the business, so it should be debited. Similarly, if any asset is sold out, it goes out of the business, so it should be credited. The asset coming into the business should be debited and the asset going out of the business should be credited as per the real account rule. Next, the third one is rule for nominal account. The rule for nominal account is debit all expenses and losses, credit all incomes and gains. These are the golden rules for recording the transactions in journal. Next, ledger. What is meant by ledger? Usually the transactions are first recorded in journal and then they are transferred to ledger. The next step after preparing the ledger is trial balance. Based on the tallied or agreed trial balance, the final accounts are prepared. So, ledger is in between journal and trial balance. Then what is meant by ledger? What is the exact meaning of ledger? Actually, ledger is a book. It is a book which contains various accounts. The ledger is called as book of final entry or secondary record. The ledger is also popularly known as principal book and also known as king of accounting books. So, ledger is a book which contains various accounts like personal, real, and nominal. In other words, in ledger, all types of accounts are prepared. Ledger is popularly known as principal book and king of accounting books. In ledger, the account is divided into two equal parts by drawing a vertical line. In ledger, the account is divided into two equal parts by drawing a vertical line. The left-hand side part is known as debit side and the right-hand side part is known as credit side. The left-hand side part of the account is called as the debit side and the right-hand side part of the account is called as the credit side. So, you can see the pro forma of the ledger account. This is the middle of the account. Left side part is called as a debit, and the right side part is called as a credit. The ledger account is divided into total 8 columns and 4 columns on each side. Date column, particulars column, JF, amount. Similarly, on credit side also, it is allotted with 4 columns. Date, particulars, JF, and amount. So totally, the ledger account is divided into 2 parts and each part is divided into 4 columns. Totally, there will be 8 columns in a ledger account. Ledger posting. Posting means transferring entries from journal to ledger. So the process of transferring entries from journal to ledger is called as posting. There is a certain rule for posting of entries in ledger. That is, the concerned account debited in the journal should be debited in the ledger. Similarly, the concerned account created in the journal should be created in the ledger. But the reference is always given with the opposite aspect. As per this rule, the concerned account debited in the journal should be debited in the ledger, which means if a particular account is debited in the entry, in ledger also the account is to be debited, which means the amount is to be recorded on debit side. Similarly, the concerned account created in the journal should be created in the ledger, which means if a particular account is created in the entry, in ledger also it is to be created. The amount should be taken on credit side in that particular account. But you remember that the reference is always given with the opposite aspect. The reference is given always with the opposite aspect. See the example. Here the transaction taken is started business with rupees 5,000. Started business with rupees 5,000. Then what is the entry for this transaction? The entry for the given transaction is cash account debtor to capital account. Cash account debtor to capital account. 5,000 rupees. Now how this entry is posted to different accounts? We can prepare two separate accounts with this entry. One is cash account and other one is capital account. The cash account is debited in the entry. All of you can observe in the entry, the cash account has been debited. So in ledger also the cash account has been debited. I have taken 5,000 rupees amount on debit side in cash account. Am I right? Because the cash account has been debited in the entry. So as per the first part of the ledger posting rule, the concerned account debited in the journal should be debited in the ledger. I have taken the cash account on debit side. I have taken the amount on debit side in cash account. But the reference is given with the opposite aspect, that is capital account. Similarly, the capital account has been created in the entry. In that particular entry, the capital account is created. So I have taken the amount on credit side in capital account, and the reference is given with the opposite aspect, that is cash account. So in cash account on debit side to capital account, and in capital account on credit side by cash account. This is the way to post the transaction into various accounts. After completing the posting of all the transactions in a particular account, the account should be balanced. So the next concept is balancing. What is the exact meaning of balancing? Balancing means finding the difference between the totals on both the sides of an account. Balancing means finding the difference between the totals on both the sides of account. No doubt there will be two sides, debit side and credit side. Both the sides will have different totals. So if any difference is there between the two totals, the difference will be treated as a balance. So first of all, you should be able to find out the totals on both the sides of an account. Then you compare them. Find the difference. Take the difference as a, there may be debit balance or credit balance. In a particular account, there may be a debit balance or credit balance. First of all, debit balance. If the total on debit side is more than the credit side, then the balance is called debit balance. If the total on debit side is more than the credit side, then the balance in that particular account is called as debit balance. The debit balance is first recorded on credit side as by balance carried on. The debit balance is first recorded on credit side as by balance carried on. Why the balance is first recorded on credit side? So that to equalize the totals on both the sides of an account. By taking the balance on lesser side of the account, automatically you can make the totals equal on both the sides. That's why the debit balance is first recorded on credit side as by balance carried on. And then it is recorded on debit side as the balance brought down. Next, credit balance. What is meant by credit balance? If the total on credit side is more than the debit side total, then the balance is called credit balance. If the total on credit side is more than the debit side total, then the balance is called credit balance. The credit balance is first recorded on debit side as a two balance carried on. The credit balance is first recorded on debit side as two balance carried on. And then it is recorded on credit side as by balance brought down. The credit balance is first recorded on debit side to make the totals equal. And then the balance is brought forward to the opposite side, that is on credit side as by balance brought down. Thank you.